In this video, I want to provide a little bit more clarity on value channels and drawing value channels. And a lot of this stems from questions I get. Also, I think I'm to blame for some of this lack of clarity because of how I draw value channels and my experience level and the fact that I already know where to look in a chart or how to understand value channels and how just me drawing them doesn't make those value channels. And I think that's the confusing part, and that's what I help to really clear up here. So I'll do a recap of value channels and why I use the Fibonacci tool to draw them, but then how it's really just a placeholder for me to look to see whether or not that value channel is valid. So let's jump in and let's start there. We're looking at Ripple, XRP, BTC on the one-day time frame on Binance. Now I use the Fibonacci tool edited in a way where it gives me all the lines. And what I typically will do to draw value channels, I'll take the actual highest price that I think is not excess. Sometimes I take the full price. It depends on the actual thing that I'm looking at. And then I'll take the lowest price, usually the close, that I think makes sense. And then I'll glance over the chart and see whether or not this helps, as whether or not the chart, this thing that's being traded, shows that these value channel lines are helpful, whether or not they hold up. And the way I drew it here, it shows me right away that it's helpful. Now, if you have no experience with value channels, or if you're a little confused, I'll explain why it's helpful. But this is helpful. So this is something I would trade off of, and actually on my XRP chart that I trade off of, the exact value channel that you see here is what I just drew. Now we'll remove that, and what I'll start with is, and one of the good explanations for this, and the reason why I used XRP is because this run-up that we see here, I was selling into this run-up. So I was selling into strength because I was looking at the value channel that was previously created of price, and this is where I had the highest probability of a slowdown. That's what I expected, a highest probability of rejection. So on this run-up here, same with this recent run up here, I was selling into that strength, and then this run up here, I was selling into that strength as well. I wasn't dumping as much because I thought that since it was still making higher highs here, that we might see another run. But I was still unloading some positions, knowing that it was going to probably most likely retrace, has a high probability of retracing, and then I could buy back at a lower price here. Here's how to look at value channels. And I'm just going to start at the basics. If I were to ask you, what is the value of XRP right now? Well, of course, you're going to say the price. So you're going to say, well, this is the value right here. If I were to ask you, what does the market tell you is the fair value, or what's the average fair value price of XRP? And if we use a horizontal array here, you would maybe say, looking at the total time it's been traded here, at least the data that's available to us here, we'd say this might be a fair market value. You might even say, you could potentially say this, maybe. But, and what I'm saying is that there's been a series of buyers and sellers trying to figure out the price at this range, and actually, I'm not even being fair, at this range. And then there's been a series of buyers and sellers trying to figure out a price at this range. But that's not wholly accurate. And the reason for that is because the amount of time, this is where it gets confusing, but this is how I think you should think about it. The amount of time, this period here was a period of exuberance, but the amount of time that the value has stayed up here is a lot less than the amount of time that it has stayed down here and it has traded in this range. So if you were to ask me what's the fair value of XRP, what do I think and fair is not the right way to think about it. So I shouldn't use that phrase. It's not fair, but what does the market tell me? What does this chart tell me is the range or the average value that the market thinks this is worth? I would say it'd be this right here. Somewhere in this range is the fair value of XRP, meaning that the trading has happened in up above this area, not the same time, but about the same time as it's happened down here. You might even put it up here a little bit more like this, something like this. So the amount of time that the buyers, and that's ignoring this, so we just ignore this. So I'm just saying you ignore this. But the amount of time that the buyers and sellers have been interacting in this market, they've said that this is kind of the fair value line. Is the way to look at this. This is how you're looking at value channels. So that's the first concept, or the first foundation. But let's talk about, so if you looked at, I'm going to create a value channel or a channel of value on Ripple overall, that's what you would draw. But value channels are specifically, what they are is basically channels of value, of buyers and sellers saying, here's what I think the value is, or it's not going to be worth more than this, or it's not going to be worth less than this. That's what you're looking, that's what value channels are. And this will be more clear here as I draw value channels, because what I'm going to do now is I'm going to say, let's just draw the value channels. No, let's not talk about drawing it overall. Let's just say, where are the channels of value that we see in XRP? And this is going to be a recap for obviously many people in the training and many people that get it already, but it's always good to recap things. So I'm going to use the horizontal tool. Where is that? I don't have it saved. So we'll go here and find the parallel channel. And the first value that I see is here. There's a value of trading here. And what I mean by that, well, it should be clear. There's a channel of value, meaning that price spent a amount of time in this value channel here. And I'd move it up a little bit more, probably here on this close. And it moved to another value channel. And so I'm just going to draw, I'm going to just draw value channels here. Here's another channel, let's say here. Another channel of value here would be in this range. And I'll scroll in here so you can see this. Keep in mind, I'm starting from the left-hand side and looking right. A lot of times you'll just have the left, obviously, you just have left of the chart. Another value area that I would say exists is here. These are ranges that buyers and sellers are unsure, and price action or price moves from value channel to value channel. So there's another value channel right here. I'm drawing it from here, this point right here. Let's draw a couple more, and then I'll talk about how this really does help. Here's another channel of value. And this has to be 1, 2 down here. So this is the traditional way to draw value channels. Basically, you have a channel of value, of trading value, and price, and this is what is probably already obvious. It should already, if you're used to looking at charts, but what happens here is that price moves from value channel to value channel. So it moved from this channel to this channel, and then it didn't quite test the top of this channel, so maybe you might want to look at this channel and say, well, is this, I mean, I would say price action reveals this is a strong channel, but then price did retest the top of this channel, but then, or the bottom of this channel, got rejected and moved and created a new channel. From there, it blew past and then got rejected in this value channel here. Went down and it traded in this channel of value. Keep in mind, if you were just looking at the chart from this perspective, this is the value channels you would have drawn. You'd have these value channels because price spent some time in this value of uncertainty. Basically, you might even have this whole range here have values, but I'm really trying to limit the values to 5 to 7 to 10 days of trading activity. And you'll see as the market unfolds here, as we unfold the market, as we reveal the price action, that this value channel came back, and when price was trying to find, when the market was trying to find, well, what's the value of this, it settled back into this channel again. But then ultimately the market said, well, it's really not worth this. So then it went down, of course, BTC and everything else, but then it went down and it retested the top of this value channel. Now, of course, this is just advanced support and resistance. So value channels are advanced support and resistance. I'm sure you're saying, well, this is just support and resistance. It's true, except for the difference, what I find that works across all markets at the value channels is that support and resistance is really just lines. And they are support and resistance lines based on price and previous price action. Value channels are on top of that, but the reason why I think they're more powerful is because you're actually taking into account the amount of value, you're taking into account the amount of time and the range here. And this is where you can get your big moves, because when price moves out of a value channel like here, it really moves. See, it moves there. When it moved down and hit this value channel and it moved down here, well, it really moves. It moved down here. When it bounced off this value channel, it moved back here. I don't know why it did that. It moved back here and it got rejected at the bottom of this value channel. Now, of course, with standard support and resistance line, you would probably look at this whole range here and draw a big line here, say that, well, previous support becomes resistance, and that's what happened. I look at it as previous value channels become resistance, because if it does break in here and create another value, then there's a high probability. See, this is the challenge with standard support and resistance. And I'm explaining this to fully explain value channels. Standard support and resistance has you drawing lines here, 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 at various places. You're focused on lines, support and resistance lines. When you wrap your head around value channels, channels of value, of trading value, of course, you have to do analysis of volume and price action and everything else. When price gets back into this value range, that means a lot of different things, especially if it stays in that value range, if you're just thinking about support and resistance. I hope that's not too much of a deep concept here, but basically, if price would have came back here in this value range and tried to trade it in this value range, I would have had more confidence that XRP has another leg up here. Instead, it stayed out of this value range here, and it traded below. It actually created a new value range below it for a while, and then it declined. And then here, this previous value range, you notice it stayed in this previous value range for a while. It had some bounces, and then eventually it just broke down, and then it broke through. So the second that it broke through this value range, you know there's a big move down. You don't know, but there's a high probability there's a big move down. And that's what happened. Big move down, another value range was created. And I could narrate this whole thing, but I think hopefully you get it by now. Now, what do you do on stuff like this? Well, this just shows strength. Now, where did it slow down? Of course, you're looking at standard support and resistance, inflection points, and everything else. But what did price do? Price went here, hit this value range, used it as support, bounced from it, and went back to this value range. Remember, we drew this value range this channel on this one here. We didn't draw it. I think we even drew it back further than that. Yeah, we drew it back here on this. So this value range that we drew here has held up 2 times now. And from those 2 times, there's been 2 big moves. And it doesn't matter the direction of the move. What you're looking for when you're charting something is, where do I need to pay attention? And on the downside, well, once you see that this value range has been broken and then it's been retested, that's 1 try, 2 tries on that value range, it broke, you know to expect a high probability there's going to be a big move. And then another value range created somewhere else. And that's where you'd be looking on the chart. Where's the next value range? Where's the market going to create the next value range? Same with this move here. On this move here, when it moved from this value range to this value range and stayed there and rejected the downside, I traded this. The reason why I entered trades here is because it didn't violate this value range. And when it broke through this value range and then used it as support, I stayed in the trade. And then as it was approaching this value range here, I was looking to sell, but it broke through, and then it broke through the top of this value range. So now this is where you're looking to the left of the chart and you're saying, well, where's the next value range? Well, this is all exuberance, so it's really hard to say. So this is where you really have to then start. You still draw your value ranges because that's what the market's going to expect. As price, if price gets up to this range, I would say the next value range I would be looking at is here. This is the next value range I'd be looking for. So as XRP, if XRP makes another move like it does here, let's say it makes the same type of move, like from here to here. I'm taking the top of this value range. So this move here, I just copied it over, puts it right in the middle of this value range. So if it breaks this value range and you enter a trade when it broke this value range, this would be where I'd be looking to sell. I'd be selling into the strength here because my expectation is that this is a value range, and there's a lot of support and resistance points in this value range. See, that's the key. So you could still, and I still do, I still put support and resistance on top of that, but I see these value ranges just inherently in the charts. And that's why this is where I'll tie it all in. So when I draw my value channels, I use the Fibonacci tool and I do this, and I draw it like this. I see these value ranges and I see, do my lines align with value ranges? And they do. They do pretty well. You'll see that. Nothing in trading is exact, so it's all ranges. So really you're just looking at, does this value channel line align with this? And you'll see that the way that I drew this here, make it like here, this value channel here on the bottom aligns very well. This one here, it's close. It gets the majority of that value channel. This one here is kind of close as well. This one here, and I know this is hard to see, but it's right within a value channel. And then this one here, it spans almost 2 value channels where I draw my value channel lines. So hopefully this brings the clarity to it, is that when I use the overall tool to draw value channels, I make sure that they align. And then if there's, so let's just be very clear here. If I just draw this here, because the way I use value channels across all markets, and I use the same tool. I draw them the same way, and they work in Forex, equities, WTI, gold, crypto. They work. That's why I use them. So if price gets up to here, if it got up here, and in my training I talk about how to project value channels beyond price when price makes new highs or makes new lows. But if price gets into these unknown value channel areas, I'll be looking for still, I'll use what I've drawn here And as long as it holds up when price moves in these ranges, then I'll continue to use that to trade off of. So let me just scroll in here. So let's say price does start moving up here, like it does here. And it moves up to here, and it moves up to here. Well, I'm going to be watching this area right here because that's the 75% mark right here, this blue line here. So if price just breaks through here and then breaks through here and breaks through here, where I'm going to be looking for a reaction, a huge rejection, would be at the 75% mark. My first huge reaction would be right here at this value channel area that we previously drew, which aligns very nicely with kind of one of my value channel lines here. So the center of that. So just to make this clear, I remove this. The center of this value channel line aligns with, I have to unhide that. My value channel line that's here. See that red line there? It aligns really closely. I mean, it's in the same range. So that tells me that this drawing that I have here, the lines here that tell me where to look in the market. The other thing that I'm doing when I draw my value channels is that there might be a line here, but I inherently look back and see what's the value there. Well, if we go in here, this is a value channel that has value right here. This whole value channel right here. And I can't scroll in too much because I got to show you the thing. But here is kind of a value channel because there's value traded in that range, but this is a stronger one because it had the strongest reaction. This here, when price gets up here, it's not as strong of a value channel the way that I'm drawing value channels as this one is here. But it's still within that range. Same with here. While there's two lines here, there's a line here and there's a line here, this value channel, based on price action moved through this, moved through this, moved through this. There's no inherent value channel in this channel. I'll still pay attention at these lines and see how price reacts at those lines, but my expectation and the probability that there's going to be another value created in this range where it's never been created before has a lower probability. So hopefully that's clear. And this is, I think, where the confusion came from. Some of this is that I would draw value channels like this, and then I think a lot of people get stuck on reading each one of these lines. Instead, what you need to be looking at is the correlation between the value channels and the lines that you're drawing, and whether or not that helps you with trading. And it's looking at the historical price action and seeing how that aligns up. And then you can put on support and resistance on top of that. Just keep in mind that when you're drawing proper value channels, that's taking into account all the support and resistance. You're taking into account the higher time frame power that you're trading off of, even if you're trading off the 1 hour or the 4 hour. When you're using value channels, your value channels are already already have the support and resistance aspect of the market built in, is the way to look at it. So this video is a little bit more, not advanced, but I didn't dive into every little concept because I talked a lot about value channels. For those that are in the training, you know, there's a lot of stuff in there for value channels. It's kind of the core of a lot of the charting stuff that I discuss. But I think some of the way that I draw on charts, I think without the explanation that I went through here, or the recap here, can be lost. So that's really the key. When you're drawing overall value channels, you're looking to say that, does that hold up? Does that hold up as a value channel? Is that a channel of value? And then has price moved from that channel in both an upward and downward way, or either or? It doesn't matter. Has price moved from that channel? And this channel right here, if we remove this, price has moved both up, down, down again, through, held for a while, and moved up. So this channel here, if price gets back down to this channel, I expect this to be a strong channel. And this might even be where you would say probably is the fair value, in air quotes, of XRP. If I remove all these, hopefully I don't need them for the rest of the video, but I'm wrapping up here. Based on what I see here, I might say that this value range would be the quote-unquote fair value of XRP. So now it might just completely move up and then create a new fair value. But right now, it looks like price is attracted to this mean value, this average value right here. And what do you know? It happens to match an inflection point. So those that are in training know what inflection points are. Here's an inflection point. Here's another one. But look at that. This aligns perfectly. This value channel aligns very closely with an inflection point. So this is kind of going full circle from where I started, which is what's the, and there's no fair value of anything. Things can always be more expensive than you could even imagine, and things could be zero quicker than you could think. So always have that in the back of your mind. There is no fair value. But if you were to say, what is the mean value? Where does price like to go back to on XRP? I would say this is probably where price likes to go back to, is in this range, based on what the historical price action that we've seen so far. It likes to go back to this value channel range. So, and just to make it very clear, if it gets back down here and it uses this as support, I would expect a heavy reaction to the upside from this value range. If it breaks this value range, I would expect a heavy reaction to the downside if it breaks this value range. But when you're drawing this, and I just want to be very clear, so I'm repeating myself. When you're drawing this, like I have here, I see that. So I don't have this drawn here. I don't have this one here, drawn here. Sorry, I need to remove that. So let's remove this one here. But when I draw my value channels, I see this value range here. I see it. So I see that I just inherently see that this is the kind of where the majority of the reactions and fair value has been traded in these ranges. I just inherently see that. I don't know if it's just me looking at charts for so long and the experience, but I just I see it inherently when I trade. So that's why I know when it gets, or I have a high probability trade when it gets to this value channel, it looks like it's making higher highs, like here. This was a clear sign to me as it was trading higher in this value range, that as it was rejecting the downside, continued to reject the downside, and then making volume was staying pretty good, and then it was making higher lows. That was a clear sign to me that something was happening. Someone knew something. Someone was acquiring. Just something was bound to happen because it was staying in this value range. So that's all for this video. I hope I provided some clarity, at least a recap of, if you're drawing value channels the way that I do, how you need to then keep in mind what is the purpose of value channels. Why are you drawing them? They're not just lines on a chart. They're places of value that has been previously traded, that shows you, the market has shown you, is previous points of value that price moves from and to. And that when you project out and add additional value channels on that, and it's respected, this can give you a good place to look for where price might find support, where price might slow down, and all the other things that I cover in all my other videos. Down below, you'll see links to Discord. Definitely join that. You'll want to subscribe here. If you're interested in learning to trade, or even if you have a little bit of experience, you'll definitely want to check out my training. There's a link to that as well. I look forward to seeing you in the next video.